Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Eastern Bankshares Inc. Annual Report. Eastern Bankshares Inc. offers a wide range of banking and financial services to its customers. At the core of their offerings are deposit accounts, including interest checking, money market, savings, and time certificates of deposit accounts. The company also provides various loan options for commercial and industrial clients, such as asset-based lending, commercial real estate, and construction loans. In addition to these services, Eastern Bankshares offers a range of consumer loans, including unsecured personal lines of credit, overdraft protection, automobile loans, home improvement loans, airplane loans, and other personal loans. The company's wealth management and trust services include financial planning, portfolio management, and automated lockbox collection, cash management, and account reconciliation services. Furthermore, the bank provides small business and residential real estate loans, as well as home equity loans and lines of credit. These comprehensive banking services make Eastern Bankshares a one-stop shop for all its customers' financial needs. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what could cause an increase in stock price for Eastern Bankshares, Inc. The stock price of Eastern Bankshares, Inc. has increased significantly over the past year due to several factors. One major reason is the company's strong financial performance. Eastern Bankshares has consistently reported higher profits and revenue growth, which has boosted investor confidence and driven up its stock price. Additionally, the bank's efforts to expand its services and reach new customers have also contributed to its success. Another factor that could be contributing to the increase in stock price is the improving economic conditions in the region where Eastern Bankshares operates. As the local economy grows, more people are likely to open bank accounts and take out loans, which can lead to increased revenue for the company. Furthermore, the bank's commitment to community development and its involvement in various philanthropic initiatives have also helped to build a positive reputation and attract new customers. The increasing demand for digital banking services is another factor that could be driving up Eastern Bankshares' stock price. As more people turn to online banking and mobile payment systems, the company's ability to adapt to these changes has likely contributed to its success. Overall, the combination of strong financial performance, regional economic growth, and innovative business strategies have all played a role in the increase in Eastern Bankshares' stock price over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of various sections of a company's operations. Revenue growth is primarily driven by investment advisory fees, service charges on deposit accounts, card income, and other non-interest income. These sources have contributed significantly to the increase in revenue. On the other hand, revenue decline is attributed to discontinued operations, accumulated other comprehensive income, loss, due to unrealized losses on available-for-sale securities, and ceased insurance products and services after the transfer of Eastern Insurance Group's assets to Gallagher. Additionally, credit risk and non-accrual loans have also contributed to revenue decline. The impact of changes in legal, regulatory, or competitive environments is uncertain, making it challenging to predict future revenue growth or decline. However, by understanding these key drivers, companies can make informed decisions to mitigate risks and capitalize on opportunities for growth. The net income of a company underwent significant fluctuations between 2023 and 2025. Initially, it decreased by $7,857,000 from $148,673,000 to $140,816,000 in 2024. However, this trend reversed in 2025, with the net income increasing to $356,966. The change in net income loss was also notable, decreasing from -$4,342,000 in 2023 to $126,158,000 in 2024, and then further increasing to $356,966 in 2025. The profit margins of the company also experienced changes during this period, although they likely decreased due to various factors such as increased expenses or reduced revenue. After-tax profit margins improved significantly due to a substantial increase in net income. This improvement was largely driven by an increase in net income rather than any significant change in operating expenses or revenue. Several key factors contributed to the changes in net income and profit margins. One of these factors was the increase in reserve for unfunded lending commitments, which likely had a negative impact on net income. Additionally, there was a decrease in net gain on sale of securities available for sale, resulting in a loss of $269.6 million in 2025 compared to a gain of $16.8 million in 2024. Furthermore, the increase in depreciation and amortization expenses from $27 million in 2024 to $46.9 million in 2025 also had a negative impact on net income. The company's financial performance has been a subject of interest in recent years. A closer look at its operating cash flow reveals a positive trend that spans across 3 consecutive years: 2023, 2024, and 2025. In 2023, the company generated $261,692 in positive operating cash flow, indicating a strong financial foundation. The following year, this figure increased to $283,836, demonstrating a steady improvement in the company's ability to generate cash from its core operations. The most recent data available shows that the company continued to build on this momentum, achieving an impressive $432,420 in positive operating cash flow for 2025. This consistent generation of positive cash flow is a testament to the company's financial health and stability. The company's debt level has undergone significant changes over the past year. According to various reports, the total debt level increased by a staggering 224.8% from $66,179 in 2024 to $214,938 in 2025. This substantial increase is also reflected in the change in total debt level, which rose by 24.3% from $2,080,724,000 in 2024 to $2,550,300,000 in 2025. However, despite this significant rise in debt levels, interest expenses have shown a mixed trend. On one hand, some reports indicate that interest expense has decreased from $339,169 in 2024 to $335,649 in 2025. On the other hand, another report suggests that total interest expense on borrowed funds increased from $1,766,000 in 2024 to $3,245,000 in 2025. Furthermore, there is a notable increase in interest cost, which rose from $19,601,000 in 2024 to $22,140,000 in 2025. Overall, the company's debt level has increased significantly, but the trend of interest expenses is inconsistent across different reports. The management is optimistic about the company's outlook, citing sufficient resources to meet its objectives for the next 12 months. However, it acknowledges that additional capital may be required beyond this period through equity or debt financing. A key aspect of the company's strategy is risk management, which involves designing processes to mitigate inherent risks in transactions and operations. The company aims to maintain an appropriate level of risk to achieve its corporate objectives. In terms of investment, the company has a clear strategy that includes investing in mortgage-backed securities to achieve positive interest rate spreads with minimal administrative expense. It also invests in low-income affordable housing and renewable energy projects, which provide tax benefits. The management is committed to maintaining a strong capital position, exceeding all applicable regulatory requirements. This is reflected in its decision to amend the Defined Benefit Plan and BEP to allow for accelerated vesting for certain employees following the sale of its insurance agency business. Overall, the company's strategy focuses on managing risk, investing in a diversified portfolio of assets, and maintaining a strong capital position. The company has made several significant acquisitions that have contributed to its growth and expansion. One notable acquisition is the merger with HarborOne Bancorp and HarborOne Bank, which has enabled the company to expand its services and customer base. Additionally, the company has acquired various other businesses, including mortgage servicing rights, MSRS, through a merger with HarborOne, as well as loans through purchases and business combinations. The company's acquisition strategy also includes purchasing credit-deteriorated loans, PCD, and purchased season loans, PSL. These acquisitions have likely provided the company with new revenue streams and opportunities for growth. However, it is worth noting that there are no reported divestitures in the provided text, suggesting that the company has focused on expanding its operations through strategic acquisitions rather than selling off existing assets. The company has demonstrated its commitment to returning value to shareholders through two key initiatives, paying dividends and buying back shares. On the dividend front, the company has a history of distributing profits to its investors, as evident from the mention on pages 10 and 49. This indicates that the company values its shareholders and is willing to share its success with them. In addition to paying dividends, the company has also engaged in share buybacks, which further enhances shareholder value. The extracted summaries highlight this initiative on pages 45 and 118, demonstrating a deliberate effort by the company to reduce its outstanding shares and increase earnings per share. This strategic move not only boosts investor confidence, but also reflects the company's focus on maximizing returns for its shareholders. That concludes the financial summary for Eastern Bankshares Inc. Feel free to comment below, and I will be happy to answer them when possible.